Hello and welcome into the KE Report. Chad and Corey here as your host, and we're talking today with Nick Hodge, co-owner of Digest Publishing and editor of Foundational Profits and Hodge Family Office. And Nick, it's always great to get you on the show about our once a month cadence here and just dig into the macro and the micro themes that you're seeing. Now, when we talked last, we were remarking off mic, it was on the 9th of April, which was really when we got the pause in the tariffs. And just the week leading up to that, it was absolute anarchy in the markets. There was big sell-offs, there was calls for recessions, there was calls for a Great Depression. People were worried that the sky was falling in the financial markets and wasn't going to recover. People were worried about circuit breaker days being triggered. So think about how much different we are at now in the markets where they've done a V-bottom bounce back. And there still are a lot of concerns about what happens when the pause comes off. But there's been a lot of deals negotiated from the White House and the administration, particularly just recently with China. We have had a Moody's downgrade of U.S. credit that hadn't happened in 100 years, but maybe that's 10 years late. So I just want to get your thoughts on the macro situation because you had mentioned on our show, and I think it was a good call, that we weren't going to enter a recession imminently. And it doesn't look like that's the case now, although there's still a lot of cognitive dissonance out there. So how are you looking at the macro setup today, Nick?
Yeah, that's right. So I think you're in a transition period right now. I was telling you that inflation was going to tick down, and certainly it did from 2.39% in March to 2.31% in April. You'll likely start to get a reascension of that now. So that's the inflation component. We can talk about what that means for commodities in a second. I told you that you were going to get a negative GDP print for the first quarter when we spoke in early April. And sure enough, when that number came out at the end of April, it was a negative 0.3% growth. Nothing crazy like some people were calling for, like you say. Certainly much less impactful than the St. Louis Fed was predicting on that chart that everyone was pointing to during that time period. And I think you get back to growth in the second quarter, a positive number. So no recession. I think I've been seeing it pretty clear here. I was telling you that the tariff stuff was going to cool down. And I was telling you all the way back in February that the VIX was likely going to spike. We talked about that. It did to 40 or 50, and now it's cooled down. Still not all the way down to where it was pre the Liberation Day or whatever, but in sort of a choppy sort of place right now. And so you can see the stock market wants to recover. The S&P has bounced back, like you said, not back to the all-time highs it was at in February, but getting pretty darn close despite all the things, right? Despite the Moody's downgrade that you said, despite ongoing wars in multiple locations. But the important thing to note is that S&P is being led by different sectors. Staples are leading, utilities are leading. Real estate is called a bid, and industrials, and that industrials, sort of leading the S&P for the year to date as we approach halfway through, tells me that we're definitely not going to get a recession. So, back to that inflation, you can see that flowing through into other commodities. When we spoke in April, copper had pulled back from 5 to 4, is now back up to around 460, 465. We had been worried about uranium, right? It dipped well below $70 down to, I don't know where it got to, 62, $63 a pound. And we've sort of seen that tick back up. And so I think we're in a pretty good spot. You've got sort of a buy the dip sort of scenario in precious metals and commodities. And I think you get back to economic expansion in the U.S. in the second half of the year, and there will be some things to buy that will be good for the commodity space. So maybe we can drill down into that any way you please.
Nick, just a first comment then on gold, how gold plays into this, because there was a lot of fear in investors' minds. The markets dropped 20% in a month and a half and then have rebounded over 20% in a month and a half. Crazy volatility. And a lot of that drop was self-inflicted with all these tariffs being put in and now a lot of them being walked back. Gold clearly was a beneficiary of this, as well as all the fears that people had about the economy. Where does that leave the gold trade now if we are seeing a shift into slightly more bullish and less fearful type of enthusiasm or type of sentiment?
Yeah, so I think the underpinning argument or thesis for gold still holds, right? De-dollarization, weakening in the purchasing power of the dollar, geopolitical instability, and don't forget the $36 trillion or $37 trillion in U.S. debt, plus the $100 trillion in unfunded liabilities that Rick Rule would be keen to remind you about. So, that's still underpinning the gold trade, and I'm not looking for gold to retrace, back below $3,000. What I see is more of a consolidation in gold, right? It had a really good start to the year. I mean, climbing from 2600 to kissing 3,500 on the cheek. And now it's got to consolidate those gains because trees don't grow to the sky. At the same time, I think that commodities are gonna continue to do well. So, and the fear isn't entirely dissipated, is actually what I wanted to get out of my mouth. Like you see, Bitcoin is now back in a bull market, back above 100,000. I think it might have hit 107 or 108,000 while I slept last night. And so that thesis, that underpinning of the reason to move into sovereign currencies, i.e., gold, i.e., Bitcoin, is still in the market. And I don't think that's going to go away in the medium or even the long term, given the structural debt issues that we have in the U.S. and indeed around the world. I just think we take a little bit of pause from it to allow gold to consolidate as we get back to economic growth in the U.S. in the second half. And so maybe a better answer to that question is through the lens of silver, right? I talk about this with my partner Gerardo a lot. He asks me all the time, is silver industrial this week or is silver monetary this week? You can see silver sort of getting back to industrial, right? As it catches a bid with alongside copper and uranium, which I already mentioned. And so it's a little bit of tap dancing around, right? That's what I was saying. By the dips, it's sort of ebbing and flowing between precious metals and commodities. So hopefully that made a little bit of sense, but I think it's time for gold to consolidate, and that doesn't mean bear market. That doesn't mean the stocks sell off. In fact, the stocks probably still have some further catching up to do. They've only been moving for really the past 4 or 5 months, and so we've got, we just went through one earnings season. There'll obviously be another one coming up in 3 months. That's how that goes, and I think you'll get a matriculation of that higher gold price in the past quarter down to the bottom line of these producers, and then you're starting to see some ongoing consolidation in the precious metals. So hopefully that answered your question a bit.
Well, Nick, let's even dig in further to it because I think what a lot of people have been waiting to see in just the precious metals complex, if we isolate it to that, is that the gold stocks would finally start catching up to the move in gold, or that silver would finally put on its dancing shoes and get moving and stick a little bit higher, which it doesn't seem to be like breaking out, but it seems more robust now. Maybe it is that industrial component catching a bid, but the silver stocks are and the gold stocks are. So, and even the platinum and palladium stocks recently have started showing a little life. So when you look at the precious metals complex, the more speculative side of it, is it possible that if gold just channels sideways in that range you laid out, that a lot of these things still have room to play catch up and really digest the move that gold has made in the last 6 months?
Oh yeah. These explorers, we were talking last time, we're in the middle of drill season now. I've got several companies that are just started drilling in the first or second week of May, and I expect any sort of, positive results or new discoveries to be significantly rewarded in the gold price and the silver price environment that we have now. Sort of the same thing with the other commodities. If you want me to talk about those, like the copper stocks really haven't had a run. I was telling you guys about Freeport and how I was buying that a couple of months ago. It's sort of still around the same price I was buying it at. Yes, my thesis has played out in that it's outperformed BHP and it's outperformed Rio because of the North American aspect that it has. But it's not been reflective of the move copper's had off of that $4 bounce. And I think that's true of other commodities as well. Like the uranium sector was absolutely hated by the retail crowd for the past couple of months. I mean, Twitter accounts with the uranium in the handle were throwing in the towel and leaving Twitter. And so, and you can see just this week that those stocks are starting to catch a bid again as uranium gets back above 70. So, I do think, again, back to the economic expansion and the reinflation is going to be good for these commodities. And I think that any good results, any good earnings are going to be continued good catalysts for these precious metals and commodity stocks to rise.
Well, Nick, I would say that a lot of these precious metal stocks have been doing well for a while. It's the juniors that are starting to play catch up right now, and some of these other sectors, like the silver stocks. With this rotation of money, do you see new money coming into the sector, or is this, in a way, the rotation of the money where people have made some really good returns in precious metal stocks, especially the bigger and mid-size ones, that they're now just rotating it into some other commodity sectors that, quite frankly, haven't run?
It's both. So I'll give you two different answers. One, personally, I help finance these companies and I keep a portfolio of warrants that I have as a result. And like many folks, I make a little portfolio on Stock Watch and I enter the price at which I have my warrants. And, I look at that portfolio and for a long time, up until the past couple of months, all those warrants were out of the money. And then all of a sudden here in the past, 2, 3 months, I look at my warrant portfolio and I have to decide, which of those warrants I want to exercise. Some of them still have a year or two, but they're very much so in the money. And so that's sort of that rotation of the folks already invested in the sector that you mentioned. Like I'm looking at my portfolio now, and in fact, I just sent an email to my broker this morning to sell a position that I'm no longer interested in. I've had for a while. It hasn't really met its timelines or catalyst, and I want some cash to exercise those warrants. And so pruning and planting is tis the season for May and June, right? That's what I've been doing in my personal portfolio. And then, broadly to that more generalist or that non-resource money, yes, I see that coming into the sector. So that was telling you in the first quarter, January, February, and March, I had written more checks into private placements than I did in all of 2024. Companies I mentioned to you, Kingsman Resources financed at 15 cents and then 25 cents, last year. And then this year, just this week, they closed $1 million financing with new blood, right? With new money, folks that are coming into that story for the first time. And I see that with other names as well. I was mentioning Kotek to you guys, which we financed at 50 cents, and they just raised $5 million this week. That's a rare earth recycling play, which we've talked about recently because of the Chinese ban. They just raised $5 million. And so there is capital rotate. It's both. Like I said at the start of the answer to this question, there's capital rotating within the sector, guys like me who are pruning and planting, exercising their warrants. But I haven't written any really new checks in the past month or two. And then there's companies that are raising money at higher prices, which is how this game is supposed to go, if anyone can remember that, right? You finance low and you help tell the story, and then where the company does what it says it's going to do, and hopefully Mother Nature cooperates, and then you raise money at higher prices, and off we go. And I think we're getting into that phase of the bull market, even though it's still relatively early days in the move that these juniors have had.
Well, I think that's a great point about the pruning and planting and, possibly pulling some profits from some stocks to rotate it down into other stocks and then looking at for those that have the warrants when they want to exercise them. But it brings up an interesting point of, a lot of people like to buy low. A lot of people resist buying low, but then they refuse to sell high. And so some of these stocks are up 3x, 5x, even 8x. When do you personally, or do you have any system around when you scale out of a project or when you scale out of a name? Is it because you find a shinier object, or do you have price targets? Talk to us a little bit about the process as we start seeing some of these stocks swell in value. When do you start trimming out of them and pruning the tree, or when do you just sell out completely in some of these stocks?
Yeah, I'll answer through the lens of silver and ETFs, which I also talk to you guys about a lot. And I don't know about a system per se. I have a process and technicals and charts and indicators I look at, like many people do, moving averages and stochastics, things like that, to see when stuff is overbought. And as I said earlier, I think we're getting sort of range bound, at least for gold. So with silver, what we did in foundational profits is we had been in an ETF, SLVP, for a while, like a global silver mining ETF. I think we were in since early last year. We were up something like 20 or 30% on it, nothing crazy. But when precious metals seemed to be overbought in early May, I scaled out of that position. And in the May issue of Foundational Profits, I said to sell that SLVP ETF, and we were in another one. So this is my personal portfolio now. I'm talking my own book, so I'm just trying to illustrate how I do it. More recently, earlier this year, we started buying the Sprott SLVR, which is sort of a hybrid silver ETF. It has a physical component, and then it owns some silver miners and developers. And we were only up 6% or so on that. So what we did is we sold the SLVP earlier in May. When just look at the chart, when that's sort of the short-term top for both GDX and GDXJ, although it's reascending now. Sold that silver position and put a price target on SLVR, a buy target, say, yes, I'm selling this one silver position, but I'll buy more of this other silver position if silver pulls back. And sure enough, that's what we got in the second and third week of May. And again, now we're reascending, but my limit order hit for that spot ETF. And so I was able to sell one silver position, lock in those gains, and reallocated to another silver position. And that's where portfolio management really comes into it. You asked about a system or a process, we're heavily allocated to cash and gold in that portfolio. I don't know if I've told you, but I write about it every month. And, we're something like, 40% in cash, gold, and gold stocks. And so we rotate those positions and we still maintain exposure, right? One of the problems I found with this industry, and you sort of touched on it with, people's resistance to buy low and then to sell high is, and people are always looking for a call, or if you say sell this silver ETF, it must mean that he's getting bearish on silver, or he thinks silver is going to go down. It's like, no, it's more a process. It's a portfolio management exercise. I'm still bullish on silver. I'm just managing my portfolio and keeping it in line with the thresholds that I set for myself in terms of individual equity allocations, et cetera. So back to that pruning and planting, that's precisely what we did, right? Pruning one silver ETF when gold and silver were overbought in the first month of the first week of the month, and then buying on the dips. And that's again, we're in the buy the dip scenario for these stocks, much like we were in a buy the dip scenario for the tech stocks and the Mag 7 for the past couple of years. That's now starting to flip, and so people need to get that through their heads first of all, and then they need to avoid that innate bias they have to take profits and stare at their cost basis and things like that.
So, Nick, if there are this many opportunities out there, I'm curious when it comes to stocks or the ETFs that follow the stocks, are you overweight anywhere? And are you scaling more so into the juniors, the smallest of the companies out there?
I am overweight definitely in GDXJ and GLD, which I know isn't a stock, GLD, but definitely overweight in the juniors by way of the GDXJ. And I'm talking about in my long-term safe, quote unquote safe, retirement money. Definitely overweight in the juniors, in the gold sector, and probably overweight in the uranium juniors as well. I took the opportunity to buy more uranium juniors over the past 6 months. URNJ, I'm talking about, and I'm still talking about my macro long-term portfolio. Yes, by nature of the answer I just gave you in silver, I'm going down the spectrum as well, right? SLVP holds much larger companies than SLVR. If you Google those tickers and look at their holdings, the Sprout ETF is holding smaller companies. And then I draw a line in the sand there. I manage my money in two different ways. If I look over at my junior portfolio, I mean, I'm obviously overweight in the juniors because it's entirely comprised of that. What I would say is, gosh, what do I want to say? I think it's been a little bit of a shift in commodities, right? Like I hold some legacy lithium positions, right? Like the Patriots of the world and the Q2s, and I even have some critical elements lithium. I mean, lithium doesn't seem to want to get out of bed. I think I saw a 9,000 handle on the lithium carbonate price, and I thought it was going to hang in there at $10,000 a ton. That's way down from $80,000 a ton it was in the sort of the 2022 timeframe. And so I'm getting more overweight in the gold, copper, silver space, whereas, prior to that, I might have had larger allocations in lithium stocks or more strategic metals, including uranium, frankly, in the speculative side of things. I don't own as many smaller individual uranium names. I'm more overweight in the gold and silver. Names I've told you about. I'm not talking my book, Kingsman Resources, Quartz Mountain, Hannon Metals, which is drilling now, and so is Kingsman. So yeah, overweight on the junior end of the spectrum for sure, on the precious metal side.
Nick, I want to dig in a little bit more to uranium because we don't have a lot of guests that can talk about it intelligently, and you do, and you've followed the sector for over a decade now, and I've been following it for a long time as well. And I just noticed it's interesting how quickly the sentiment will shift in that particular sector. And it's different than lithium in my eyes. I want to get your thoughts on this because lithium had a bunch of supply that came online in a response to higher prices, and it kind of swamped the market. There's also big advances in direct lithium extraction that the oil industry is working on, and if that works, that's going to be a game changer. With uranium, there's really no substitute for it. There's no supply coming online that I can see. a lot of the mines are taking a lot longer to ramp up that are in production, and even some of the U.S. producers have struggled a little bit to ramp up. And yet, there seems to be bad sentiment in the sector still, even with the fundamentals being probably one of the most bullish of any commodity. So, how are you looking at uranium, I guess, medium term? Do you think that more people rotate at least some of those precious metals gains into uranium, or do you think it's being ignored, or is there a little life lately? How are you looking at uranium and uranium stocks?
I know for a fact that the generalists are rotating more into it. I follow Keith McCullough on the macro side of things over at Hedgeye, and he's been lightening up on his gold equity positions and just went bullish on uranium equities this very week. If you look at the chart, from 2011, sort of the tail end of that last bull run, when uranium was at $72 a pound, it pulled all the way down to, gosh, I don't know, $17 a pound, and then sort of the 2017 area. And then it started getting bullish, right? 2019, 2020, certainly 2021 and 22. And it ran and overshot all the way to 100 and I don't know, $5 a pound. And now it's retraced those gains. It in fact came back down lower than I thought it was going to. I thought it was going to catch itself at 72. It ended up going all the way down to 63 and change, $64. What we've seen just in the past couple of weeks, or in fact since months, I'm looking at the chart. I guess I got a monthly candle on here. Bottomed out in March and now is right back up to that 71, $72 level. If you were to see my screen right now, you would see a line at that $72 level that goes all the way back to 2011. And that's now become the resistance. So we get back above the $73 a pound. I think you can get to 80 or $90 a pound in short order. And there's a couple of things driving that, some macro, some micro. So on the macro side, it's just the reinflation. I've said that a couple of times in this interview, but that's all it is. You had the inflation number coming down for the past couple of months, and now it's going to start going back up for whatever reason, right? It doesn't necessarily matter what it is. Israel's going to bomb Iran. Great. Well, oil's going to go back up, and then the CPI is going to go back up, right? Or we're going to get an end of the pause in these tariff negotiations and tactics, and they're going to actually start to get implemented, and the prices of things are going to go back up. That's a very macro driver of commodities, and uranium is not unaffected by that. So that's one tailwind I see for uranium. And then I'm going to steal Rick Rule's answer because I was just interviewing him earlier this week, and he's talking about the term contracting market, which is very opaque, and you don't have a lot of insight into, and how that's starting to move behind the scenes, right? The scenes that you don't have access to, the utilities going out there. It's starting to contract, and by nature of the limited global supply and certainly the limited Western supply, that's going to have to be done at higher prices. And then I guess a third thing I see in the uranium space is it was relatively quiet on the policy front for a little bit. We got some stuff with Biden, we got some stuff in the Inflation Reduction Act that was very bullish, and then sort of for the second half of 2024, early 2025, not a lot. And then boom, just here in the past couple of weeks, concomitant with the spike in uranium off its lows there in March is policy announcements from the Trump administration that they're fast tracking mines in the American West. I saw that the first utility in the U.S. this week filed to start permitting the first SMR owned by a utility, and so you have this confluence. I'm going to an island this weekend for Memorial Day, so I'll give you a water analogy. That you have this confluence of factors that are coming together that are all bullish for uranium. And that's why I think it's time to get back into the trade. And I guess I'll just stop there because I think that was a pretty good answer.
Nick, what about nuclear stocks then? What about trading those rather than going into the uranium explorers, developers, those type of stocks?
Go for it, man. I mean, yeah, I think they're going to be risk sentiment back on for those sort of as we get into back to a bullish S&P in the second half of the year. And I think that there'll be more appetite for those non-uranium equities that are more in the nuclear space. And I'll give you sort of an anecdote. We had this AI boom over the past year or so, and to a certain extent, this quantum computing boom. I don't know how closely you guys follow any of that stuff, but for a while there, pre-Liberation Day, pre the crash in the S&P, some of the stocks that were moving the fastest were those, quantum computing stocks, Rigetti Computing, supercomputer, things like that. And there's also some sort of drone stocks that were doing really well. I think you get back to that risk on sentiment where people are looking for these equities that are different from the traditional equities that have run in the past 2 years, not the IT stocks, not the communication stocks, but these sort of, again, industrial, those are relatively industrial names. And I told you at the beginning of this interview, the industrials are the best sector in the S&P so far this year. So yeah, I mean, look, you look at stocks like Oklo, they were running again in the past couple of weeks, SMR, for example. So I think it's fine to look at and own those names. I personally don't. I stick to my knitting in the uranium space, but I am jealous sometimes when I look at the charts and I pull up Oklo or NewScale, things like that. So by all means, I think those are good names to look at, and I think they'll have a run commensurate with uranium's reascension in the second half.
Nick, just one more follow-up on this sector. When you think about a lot of the news flow, it's been around small modular reactors, and those stocks you were just mentioning, OKLO and SMR, NNE. So those are the future of small modular reactors. And a lot of people were talking about how that ties into AI data centers and the need for more electricity. That's still 5 years off for most of those. But if you just put that on a shelf for a second, there's still a good underlying fundamental thesis for the nuclear sector if there never was SMRs, if there was an AI data center. So maybe just speak to the overall fundamentals for the sector just from a reactor build standpoint, a reactor restart and life extension standpoint, and the fact that there's just not enough supply coming online. So maybe speak to that angle in the uranium space.
Sure, yeah. I mean, the US needs 50 million pounds of uranium a year, and mine's something like 1 or 2 million pounds. I mean, it's really tough to make up that difference, especially when you've got bans on Russian imports, et cetera. And so there's going to have to be a reinvestment, and that's one of the reasons I think you saw, Trump fast tracked that project a week or two ago in the American Southwest, and that's why I continue to point to the names that I own, right? Energy Fuels, which I mentioned to you before, and then names like Denison, which I was going to mention to you this week. I mean, they're holding, 2 million pounds on their balance sheet of uranium inventory worth 200 million pounds, and they're going to make a move to get this Phoenix project into production. And so I think that the sentiment is finally getting through, not the sentiment, the reality is finally getting through to the government and to these politicians that we have to get these projects approved and built and financed. Otherwise, again, stealing from Rick, the lights go off. So and you got to touch on the climate as well, because we've done this green experiment for the past 20 or 25 years. That's the space that I actually started in my career, writing about clean tech stocks and solar and wind. And the world, I think, is realizing that's not a viable answer to neither the emissions reduction nor the growth in electricity demand that the world is going to see in the coming years. And so in the US is just a microcosm for the rest of the world. I mean, China's continues to build out reactors. Japan is very much back in love with nuclear energy. And so, you mentioned the restarts, you mentioned the new builds. That's only going to compound the fundamental issue with uranium that never really went away. So, and that's probably how I'll wrap up. It's like you can have these overarching macro themes, these fundamental drivers of a space that we all know and I just touched on. And yet, when you have inflation go from 8% to 2.3% over the course of a year and a half, I mean, it sucks the wind out of commodities. There's no defying those macro headwinds. And so that's what I'm saying. Now we're getting back to a bottoming out of inflation down at 2.3, 2.4%. And if you can get that back up to 3 or 4%, which I see in the next 6 to 12 months, coupled with the uranium fundamentals that I just laid out there, I think you can get another good run in this uranium space. And make no mistake, we had a good run from 2020 to 2022, but we didn't solve any of the underlying issues. Like, yeah, Energy Fuels might have started producing a bit, and Encore, et cetera, but nowhere near, as I said, the 50 million pounds of uranium that the US needs for its however many reactors we have, 98, 99 reactors, something like that. So yeah, back to bullish on uranium after a pretty bearish pause there that was macro induced, but not, uranium fundamental induced, if that makes sense.
Yeah, I think it makes a lot of sense. And so we'll be looking at the reflation trade really across the commodity sector as you've outlined here today. So whether it's in the silver or copper or uranium, maybe even some of the other commodities, you're going to see that reflationary trade as the world is not falling apart and as growth continues, as inflation ticks up, should be good for the commodity sector. And it should be good for all across the board, not just the larger companies, but even some of the juniors starting to get a bid. So very nice to have you on the show, as always, Nick. And for people listening in, if you want to get more information about what Nick does and what him and his partner Gerardo do, definitely click on the link below. It takes you over to Digest Publishing, where you can see their full suite of offerings. And Nick, as always, looking forward to our next conversation.
Me as well. Thank you, guys.